Hello and welcome to the Wednesday check-in brought to you by David Gockstein. I'm your host, Landy, and today is July 29th, 2026. And I'll start off by saying, as I said on Monday, very highly unlikely that we would see any kind of a rate change out of the FOMC meeting today, and we did not see a rate change. Now, that doesn't mean that we won't see one, in the next meeting or the meeting after. There's a bunch of things that I will be talking about in the coming weeks over the course of August to kind of prep those of you who watch this content fairly regularly on my thoughts on how the Fed may begin to approach what is going on. And primarily, I'm going to put it this way: oil up, very highly likely that we would see an environment in which they either hold or raise. And I do think that he's going to really stick to his guns and maybe hold through some pretty interesting times if we did see oil continue to head up and stay up. And I think vice versa, the same thing. Although lower oil prices would meet the objectives that he's been looking for. So he did stress the 2% inflation metric, which is going to be it's going to be tough to hit, but the way to hit it is with lower oil prices. But it is a global asset, and there is a lot of things happening around the world right now, whether it be conflicts or outside of conflicts. So watching oil prices is one of the main things that you can do, as that is going to be a very good barometer for inflation and inflationary and deflationary price pressures. So let's talk about Bitcoin, though. And for those of you that do watch this regularly, please like and share this out there. I really do appreciate it. Something that we talked about on Monday is that we need to pay attention to 62.5 on the downside and $65,000 on the upside, right? So Monday we had the larger candle down that did paint a lower high, and it did break the uptrend. We got a move towards 62.5 with a front run here coming in at 62,685 on the index. Now it did actually head just right about 62.6 on some exchanges, maybe even a little bit lower, right towards 62.5. But realistically, it's about closes below there. And now we can see that we are starting to get that real compression, that tight compression on the Bollinger Band set. So the next move, well, it might swing around and maybe threaten expansion on one side or the other. We need to see close over close expansion for things to really get rolling for the next volatile move. And in this case, let's go ahead and throw on the support and resistance areas of interest. You can see that now the criteria is very clear for this local zone. Below 62.5, we're headed right to the areas that I talked about before on Monday and prior. Then I'd be looking 61 to 61.5, and below 61.5, we would get full-on expansion, not only below the lower second, but the lower third, towards the swing low here at 61,281, 61.3. You can get a swing down to 61 if it's closing inside, great. But it would still be expansion anywhere below 62.5. But it'd be expansion to the most recent lows. Anywhere beyond there opens up the actual 58 to 60 area down here, with the monthly zone at that 58.8 to 60,200 here. And then down below to that $58,000 level. Any kind of price action below there on daily closes that breaks it, obviously a structural break to the downside, but also on expansion would lead to at least initial downside targets being the mid 50s, somewhere around 54 to 56 on the top side, and then 52.5 to 54. Now I did tell you that I would be adding the $50,000 as kind of a median point before getting to the bear market lower high of 21 into 22. And that was, the $48,000 level. So 48 to 50, I'd be looking next if we did see 52 breaking down from there on any kind of larger expansive move down. To the upside, back above $65,000. Same kind of look as before or prior, right? Nothing has changed here. Looking right back to the most recent highs in and around $67,000. Anywhere above there, we're running 67.3 on its way to test somewhere around 68, 69K here. Obviously, the zone for the prior all-time high from 2021 up to the next weekly at 70,500. So I would take this purple zone to the next zone above 70,000, 70,500. And then that would, of course, would open up this weekly zone between 70,000 to 70,500 on the bottom side to 72 to 72.2 on the top side. Anywhere above there, $2,000 at a time up to 74,000 to 76, with, of course, the break even there at $75,000. That's where I'm looking. And the criteria is very, very clear. And it is based on closes for expansion. So swings, above, fine. Swings below, fine. It's about the closes that kick off expansion. And something to be aware of is getting the initial expansion to the downside and then reclaiming, right? So if we were to get any kind of expansion to the downside, we don't quite hit targets for the major areas of interest, but say we sweep the lows, and then come right back in. Just be aware that, you can see things just run right back to the top side during an expansion that then opens up the top side targets. And then you can invert this, and you essentially get the same look. And that's where we would just get, if we did come out the top side, we break the lower high here, we get some higher lows, get initial expansion up. Just be aware that it could easily run the bands right back to the other side. So the beginnings from coming from a compression, it can be like kickstarting a dirt bike, right? You gotta kickstart a little bit, or you gotta maybe a gas mower, and you gotta prime it, and then you gotta give it a few good rips on the ripcord there to actually get it started. And I would be aware of that. The other thing to be aware of is if we just kick off expansion and we get close over close expansion that hits target, right? So that is what I'm going to be paying attention to for the rest of the week. Now that we are after, we're post FOMC. I know the market didn't take a lot of what Warsh was talking about as positive stuff, but we already saw these moves were pretty well baked in ahead of time. The next thing to talk about is oil. And we did hit target. In fact, we hit target perfectly on our zone down here. We even dipped in, tapped the basis band here on the daily for WTI. And you can use CFDs on WTI if you're tracking. It's going to be the same as CL1. But we tapped the basis band, closed right on the $79 to $80 region. And then nice move right back to the top side. 84 to 86, we hit 85.57 on the top side, closed right at 84.60. So now it's a matter of, we saw the compression to the expansion. We've now seen the mean reversion. So it's all about getting continuation above 93.5 and 95 specifically, to then try to push out to 98 to 100 by the upper third. And then potentially up here at the top there, the purple area is 102.5, right? That would be your continuation to higher prices. But I would be aware of initial expansion to an upper second overhead resistance retest, and then back down. So just be aware of a scenario. So there's two big scenarios, right? So we had the big expansion up. This kicked off compression to expansion, right? And what I would be paying attention to, and that's not what I wanted. Let's see. So what I would be paying attention to, all right, so we had our compression, got our mean reversion, higher lows, got some higher highs, consolidation to higher highs. Now we've got higher low, equal low structure as it relates to this low. So beware that it has to come back up here, but beware of something that it either fails here a little bit lower with a lower high and then starts to trend back down. And especially anything through the 76 region on closes that trends back down. The other thing you got to be aware of is that it comes up and it retests around the upper second and double tops or makes a slightly higher high and then begins to break down from there. Maybe there's some higher lows that are more local than that. But that is something to be aware of. How would we be targeting those? Well, a little bit at a time, right? Big move on the Wednesday session, right? But back above, the gap down at 86.12 and the upper first standard deviation, well, that's going to open up 88 to 90 again, right? So a gap fill up to around that 88 region, 88 and a half up to 90, and then be very, very aware of the 92 and a half to 93 and even 93 to 95 up here as areas of interest to the upside. And unless we see closes above, 93 and a half, which would put price above the upper second, that subsequently start closing above 95, I would be looking at that as short territory unless we start seeing closes above the high at 93 and a half that would push things above the upper second standard deviation and then start closing above 95 to really give it that next push. Otherwise, if I do see it come up here, it gets past the gap fill, comes up to 90 and starts to reclaim by the upper second, we've got to see expansion for the long trade, or it's got to, it's probably going to break back down. Maybe go back into a compression, maybe change trend, depends on things. Or you'd at least want to see a compression. We've got a pretty wide set bands right now. So beautiful higher low, though. So be aware of that. This was a perfect basis band retest. So be aware of continuation above those areas, 93.5 to 95. But also, if we start to see dailies start to stall in and around those areas or reject them very heavily, we're going to start seeing short setups start to present themselves. Now, full disclosure, I was looking at this area already. We talked about this area to the downside, 76 to 79, 76 to 80 as a zone and a mean reversion back to the basis. We got that perfectly. I went long. I took quite a bit of profits. I left some on the table in case we do go up and continue on. And instead of testing it as a range and as overhead resistance, but try to move through it. If that's the case, great. If not, I'll be monitoring essentially above 86, right? And watching price action closely if it does continue to get there. Other than that, stops are moved up. Trade has been good. We'll see what comes of it. And we'll see if it was just reactionary, because a lot of this move, by the way, was already done by the time the Fed meeting, the Fed rate decision came out, and then of course the Fed meeting came out. So a lot of this move was already over for oil. So let's go ahead and take a look at traditional markets, and this is where things get a little spicy, a little interesting. Let's go look at SPY, as we have now initiated downside expansion, but you'll see post-market is back up by the lower second standard deviation. Right, but we have initiated expansion to the downside. Any continuation is going to come below 725 down to the 722 to 720 region, aiming for right around 715, 716. Any drop of that, 710, 705, and then 700 back in play towards the 695, 700 highs. That would be a larger correction. Not crazy, but it would be a nice large correction. Not totally unexpected if it did occur. We've been talking about this for a while. Now, granted, we did not get the higher highs on the grind in this area, and the bands didn't squeeze quite as much as we've seen in the past, but this is a pretty aggressive move. So it's either going to reverse off of these areas, which it could, because there's a lot of interest in and around this area, around the 715 to 725 area just below. I would definitely be watching it, but more importantly, we're already hitting that expansion to the downside to the areas that we talked about we've been talking about this for quite a while, but essentially looking for, the 28K, right? So Monday we had already dipped under it. The next area we're looking for is essentially 27.5. We got that in the Tuesday session, and then we got our move down to 27. 192. Next big area essentially is going to be 26.9. Anywhere below that, we're looking for this to probably deepen down to the 26K region, 26.5 in lower term timeframes over here. and then down to 26.2 for a direct retest. If we don't see SPY doing the same, it likely will. Maybe not a direct retest of its highs, but just pay very close attention. Now we did get a trend break to the upside and then right back to the lows for Dow. And this is going to be interesting to watch as the rotation occurs within markets. Again, 51.3 is going to be where you want to watch. We did close on expansion here, but it got picked up post-market. So it's all about breaking down below there. And then we start looking towards that 50,500 to 50,000. I would take 50,800 to the downside if it doesn't just swing it down to 51 and then come right back in. But we did get a liquidity grab and then dump off, right? So a false trend break there in that regard. And honestly, NASDAQ and SPY were telling the story there in terms of price pressures combined with oil hitting a major area and bouncing aggressively. And look, there was a day's notice, right? It's the oil bounce was not like unexpected after the close. I noted this on the timeline that we had the perfect basis band test, and we closed right on the support. So it was either going to get its continuation immediately, or it was going to do it. It didn't. It gapped up. And as soon as it gapped up, you knew that this was going to likely rip right back into the mid 80s. And that's exactly what it did. And then what we saw there was, some strength come back to oil. We saw markets dumping off. But interestingly enough, we had the opposite move occur in Dixie. So again, we're going to find, I think, and this is going to be, and I think it's going to take a while for the market to digest the disconnect. And I think that this is probably going to be a longer period where we see a disconnect between Dixie and oil prices. I'll explain more over time, my reasoning for talking about that. But for those of you that have listened to any of the spaces that I've talked about this on, we typically, you look at oil going up, you typically would see that being correlated with Dixie, right? Oil down, Dixie down, oil up, Dixie up, right? Fairly well correlated, obviously not 1-to-1, but an overarching trend typically. The entire time that oil was headed down, Dixie was gaining strength. And actually, that's something that you would want to see. Now, and this is where over time I'm going to explain my thesis about the Fed policy, and macroeconomic metrics that come out and reporting that comes out, as we will have PCE and GDP, preliminary GDP coming out, right? There's a lot of broken metrics out there. But what the Fed would like to see, honestly, is lower oil prices, that in order to do cuts, what the Fed would need to see, in my opinion, lower oil prices but stronger dollar. And usually those things conflict with each other. But we are in the monetary reordering. We are in the transitionary period of a global monetary reordering. And if you don't know what I'm talking about, you can go and read some of the pieces that Scott Bessent put out there back in 2024 before he was selected as the Treasury Secretary or even being floated. He was kind of in the competition before the 2024 election, but he was putting it out there that he wanted to or desired to be the Treasury Secretary and oversee a global monetary reordering. And we are in it now. If you don't believe me, look at all the macroeconomic experts that are spinning themselves out of control and don't know which direction things are going. So you have an advantage if you've been paying attention to my videos, streams, if you've been paying attention to the Wolf trading crew, if you've been coming to ATC, you've been ahead of the game. So I appreciate you all. I hope you do like and share this out there if you did find this helpful. I look forward to seeing you all on Friday for a live stream at 8 p.m. Eastern, 5 p.m. Pacific Standard Time. Not sure if I'm going to have a guest this week either, but maybe I will. By the way, Cade from Wolf Bitcoin, Many of you may know who he is. If you don't know who he is, you should go follow the Wolf Bitcoin account. Check the timeline. But Cade was on with David Gokhshtein today. Really great to see really a rising star, I think, in Cade, getting to talk about, a little bit of business stuff, a little bit about himself as well with David. So that was really cool. Yeah, so go check that out, definitely. And I will see you on Friday for a live stream. Maybe Kate will join me. I reached out to Tony the Bull, as him and I often when I have talked to him have talked about Bollinger Band stuff. But he's an expert in a lot of different areas of technical analysis. I'd love to bounce some ideas off of him, or vice versa. But I would also like to highlight him for those those folks that maybe haven't seen his analysis before. But I think you'd find it very familiar if you have been watching my stuff. He's far more detailed and far more technical than I am. I am what you would call lazy, but lazy works in this case, and I'm okay with that. But I'm always willing to dive into the detail. I am a nerd for it. So that would be a bit of a, for me, right? But also for you, because I think that many of you could also, find some enjoyment out of picking his brain and seeing how he breaks things down as well. So, but we'll see. If it's not this Friday, I'll get him on at some point. You never know. Maybe somebody will come in and crash the stream as well. But I will talk to you on Friday during the live stream. Please come in, chat. Near the end, I'll just kind of take a look at tickers that folks are looking for. And then I will, I'll see you on the various Spaces events and on David's show for a segment, likely Thursday. So tomorrow. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Take care.